All right, market cycles. Cycles are what drive markets. So cycles are more of a macro theme, but they happen on smaller time frames as well as larger ones. And again, knowing where you are in the current cycle is very important. So if the stock market's in a bear market and everything is falling, does it make more sense to align ourselves to current market conditions or try to buy the first rally that rips higher? This is adding another layer of context and goes hand in hand with our higher time frame analysis. It's a different way to view the larger trends we will trade, and it helped me connect the dots on how markets transition from bear to bull and vice versa. And something important to think about here as well is that we just spoke about the fact that you want to align yourself with the higher trend, but as we're going to see, there's going to be times where it makes sense to trade against the trend when things move too high and too fast from the regular trend as well, right? There's times when things get out of hand and you don't, even though the trend is higher, you don't necessarily want to be buying, right? There's times where it could make sense to capture the momentum to the downside as things sell off and things, let's call it a crash, right? But we'll go over that in the future. But again, understanding where you're at in the cycle and how things and momentum and all that stuff is very important. So 4 phases of a complete cycle. So they are generally driven by supply and demand. Not every cycle looks, starts, or ends like this. Just, making a reference about this. It's just a general idea. But the market for your ideal strategy is always available to you if you understand this concept, right? Because the idea is, even when, let's say, the stock market's crashing, right? What's happening in the commodity markets? What's happening in the crypto markets? If you understand this accumulation, advancing, distribution, and declining cycle, and you understand cycles in general and as from a larger perspective, then maybe as we saw here and most recently in 2020, right? The markets were topping out while the commodity markets were heating up because they've been dormant for the last, 5 or 6 years, right? They haven't done much. But now things, at that point, things started to shift. When the sell-off happened, money started pouring into commodities and out of the traditional markets, right? So if you were paying attention to that, you understood it, then you could have made the switch and you're not just sitting there in the stock market, trading regular stocks that are going down. You're now in a commodity bull market that can run for years, right? So you don't have to just stay in one spot, but part of being able to know where to go is understanding the market cycle and where we're at within those. So what we are trying to avoid, right? So a trade is not an investment and an investment is not a trade. You can make strategic trades around your investment, but when you set up a trade, it should stay as a trade and not turn an investment because you didn't make any money on it because you lost, right? Because your timing is bad. So take a good hard look, as none of these emotions belong in trading, yet they are pervasive and common for the failing trader, right? So this is like the roller coaster of the typical newbie, right? So let's say the market, a specific stock's been going up, it's been going crazy, it's in the news, and everybody's already in. The trade is pretty much stale at that point, but it's still moving higher, so you buy, right? And this is how that works out. As that trade goes higher, optimism, excitement, thrill. Wow, I'm really smart, guy. I mean, that's how I started out. I got really, really lucky in the silver market, right? I mean, that went through a year and a half of essentially going straight up from $20 to $50, over leveraging, trading options. Some days I was making $1,000 a day. I started with a $1,000 account, right? It's crazy, right? And so I remember thinking these things. Man, I'm smart, dude. And it was exciting, right? Having way too much money in the line. When money's going up, it's exciting. When it's not, man, all these really, really kind of kick in, right? But, so as the stock keeps moving higher, you're like, okay, man, I'm a smart guy, right? Peak euphoria. And then what do we know happens, right? Everything has, because of its cycles, right? And because of the way that money flows, eventually things top out and they start moving lower. And if they've been moving up for a while and for a long time, there's a good chance that they can have a major crash, like crypto. Think about that, right? Excellent and awesome rides to the upside, but man, the ride to the downside is just as crazy, right? So, and as it happens, if you just continue, if you don't know what to do, and you're just assuming and thinking that it's going to come back, then you're going to hold through it, right? And then what happens? Oh, anxiety, man. This is what we're trying to avoid, right? The temporary setback. Oh, I'm a long-term investor, right? No, you're not. No, denial, fear, desperation, panic, right? As you start to lose all of your gains, and now you're actually losing money. You know, how could I have been so wrong? Stock market's a scam. This is stupid. I knew better than this. My dad told me I shouldn't have risked money in the markets. Despondency, depression. And just about that time frame is about when you throw in the towel, right? And this is the point where you should be buying. This is where the most opportunity lies. But what do, right? We're emotional creatures, and the way that this works is we buy when we shouldn't, and we sell when we shouldn't, right? Should be selling here, should be buying here, right? So anyways, I thought this was a good visual representation of that. Right, see the point of maximum financial risk, point of maximum financial opportunity, right? So understanding those cycles is important. All right, the best trends. So the longest trends generally happen when something has moved from out of favor to desirable. So most times this happens quietly without any news or media attention. And once it's in the news, it generally is in the last phase of trend acceleration, which is where I like to be selling. The news and media are also great at calling an asset dead after it crashes and starts its consolidation to start moving higher again. And this is where I like to be buying. So can you see how this is exactly opposite to how most retail traders act and think? Maybe you can relate. I know for sure that I can. All right, professionals. They ignore the financial media. And for good reason, right? This is an awful strategy. They sell stories because of the hype. So it's no different than any other news. They don't properly represent what's actually happening. By the time most of retail traders have piled into the trade, we want to be getting out and moving on to something else. Short-sightedness is the main issue here. Nothing about what you see below informs you of good times to buy or sell, right? So here, the media. Bitcoin could go to 100,000, right? This is the final phase, the most risk. When you see the trend has already accelerated several times, it has gone vertical at this point, right? But people were still piling in, right? There are buyers all the way to the very top of this. And they are the first ones, can be the first ones to bail out in the trade, right? Unfortunately, a lot of them are people that don't know what they're doing. And so they're buying up here and then they're holding on to it, right? With every bounce. Oh, maybe it's going to go back to the highs. Oh, no. Oh, maybe this is the one. No, it's not. And then the media is also good for, well, Bitcoin is dead now at this point, right? Because it's fallen off. They don't have any financial risk here. Their job is to sell the hype, right? But we know that after it's gone from here to here, from 20,000 to 10,000, this is now a half-priced asset, right? And $10,000 ended up being cheap in the long term, right? Now, obviously, it went much lower, but this is where the value is, right? The value is in here, was in accumulating when it was selling off and whenever it was slowly starting to go up again, not up here, right? Now, it's not that you can't create and have momentum strategies in your toolkit. You just have to be much more agile, right? There's nothing wrong with jumping in here and being like, hey, I'm going to come in here and I'm going to scalp out some money, right? While this sucker's going, I'm going to take some money out of this. That's fine. That's not what we're talking about here. We're talking about what happens when you don't understand the way that this works, the way that the cycles work. Acceleration, the deceleration, and the selling off of trends. And then when they reverse, right? That's where you get in trouble. All right, so how did it work out? Right, so this is where we should have bought, right? Accumulation. This is that accumulation phase. And this is the acceleration phase, right? So as it's going up here, you're taking money off the table, right? This is where we should have bought. But this is where we probably bought because fear of missing out got the rest of us, right? FOMO. Now that it crashes, right? So we're probably sold. Bitcoin's a scam. So this is now out of the news cycle and out of favor, right? And that typically is also the best prices to buy at, right? So again, this is accumulation for a much larger run, right? Just like this is tiny and this looks small in hindsight. This looks bigger, but this is even much bigger, you know? So when you are patient and think like a professional, you get to reap the benefits that the average trader only dreams of. You will be buying where he is selling. And that's just from a lack of knowledge and understanding, which is what we're here to break. So cycles and trends tend to move in waves. This is true for weekly or 1 minute charts. This visual shows the importance of lining ourselves up with the trend as best as we possibly can. And not just long term, but in the immediate as well. So notice the best place to position was after price moved against the larger trend. The longer you waited after every down arrow or up arrow, the closer you were to price moving against you, and also the closer you got to a complete reversal in direction. We want to optimize our entries as best as possible. Profit potential is ultimately determined when you buy. So I thought, again, this was a good visual representation of that, right? Is that we understand that stocks, even when they move up, they do this, right? So that's like a wave, right? It's just like this. It's moving down. So what I was saying here earlier is that this was the moment of maximum opportunity, right? But this was also where price was moving against the trend, right? And then the longer that you waited to buy or to sell after the arrow, after the maximum point of opportunity, you are setting yourself up for, again, price moving against you, right? So that's why we want to watch momentum, how it reverses, and how it moves. And then what I was also saying earlier was that every time, so you said, this isn't the one, so you wait till this one. Every time you wait to get into the market, you're getting closer to when the trend could reverse, right? Where there was no opportunity at all. Because here, let's say you sold here, this hurt for a little bit here, but you're still in line with the trend, right? So you're still going to make money. But the more you wait here, and then if you waited here, this moves in your favor, but it never came back to even a point of break even. You've just completely missed the boat at that point. All right, so what to look for? As we can see with most sustainable trends, they are generally neither steep nor flat. There's usually that 45-degree price trajectory that we see pretty clearly on long-term trend lines. The current and developing value of that financial asset lies somewhere in the middle of those oscillations as price moves higher or lower. As speculator sentiment gets overheated, we will see price tend to overshoot and undershoot that value. Then, like a rubber band, it will snap back to the other side of the spectrum as the fear-greed battle rages on. So the picture in the last slide represents this very well. It is our job to identify where we are in those oscillations regarding the overall trend in order to position ourselves correctly in the market. Who is currently in control? When and where that might change are very important questions that we should constantly be asking as price action develops.